Hello everybody, in this video we are going to review the Forex minors and exotic pairs. This is the weekend video review for the trading week starting on June the 17th. Alright, thanks for joining. I'm Giuseppe Basili, also known as the FIB Stalker, and I'm a full-time trader, market strategist, and mentor. Now before I proceed, I want to invite you to join our growing Forex stock and commodity trading mastermind group on Facebook. It's very easy. You go to www.fibstalkertrading.com and you can have a look at my website as well. I also offer a free trading course there, and you can go to Facebook and this will lead you to the Facebook group. All right, and it's a mastermind. We actually exchange information. There are units dedicated to different markets. We look at Forex, stocks, equity, futures, commodities, and it's a growing group here. Right? All right. So let's continue here. And as I mentioned, we're going to look at the Forex minors and exotic pairs. This is a video review for the week starting on June the 17th, 2019. Now, as usual, if it's the first time you watch this video, please always remember and pause it here and read and remember that this information is mainly provided to you for your general information and education. Past performance is not near future results. Trading Forex carries a high level of risk and might not be suitable for all investors. Okay, so this is not to be considered a trading recommendation. All right, so let's dive into the markets. We're going to start from the Euro Pound here. The Euro Pound has been moving, has been going really nowhere here, but there is a structure in price that we identified on the weekly time frame here. There was a 50% short above price into the first target, right into that first target, and then the next measured move has failed. So from a weekly point of view, this market is in the verge of a reversal. And as you can see here, it has been moving many years here, 9-10 years in this large range. And if the move lower resumes here, we could see the 50% come into play, 0.8119. So the second part of 2018 here could be a very volatile year. In this market, we already have the setup short, bringing price into 85.27, 83.71. Okay, when we look at the current price here, current price is not going anywhere, and we don't have an edge. So the only edge we have in this market is on the weekly time frame. When we trace this trace here, clearly it has not been respected. And so this market is moving laterally below a short setup. So the and as you can see, bulls and bears are not able on the daily time frame to tame this price, and we are looking for a continuation lower in this price anyway. New Zealand dollar, Canadian dollar, on the other hand, it has been moving laterally here as well. On the weekly time frame, we had these we don't have really references because the measured moves here have failed. So I'm going to stick with this level here because this level has come into play before, not respected. Now it's being respected, and we will see if that is going to push this price higher. So on the weekly time frame, we have basically sideways conditions here, potentially with a downward bias, but this market could actually even continue higher into the 92.85. At the moment is moving between, on the weekly, between 88.83 and 92.85. Okay, when we look at the daily time frame here, we had a very strong move higher, and so this gives us the condition for a continuation of the extension here. When we look at the sequence though, when the first target was hit here, the market has broken the sequence. Well, actually, this is, I will consider it respected still. Therefore the 90, 99, 91 level here, 91 level has been trading. The first target, which is 91.87, has not been reached here, but technically this market is still in a move higher. Okay, so we need to respect that until this actually changes here. We need to respect that. Now on the daily we can also trace the 50% short here, and as you can see, that seems to be responsible for not for price not reaching that first target. Okay, so it seems that this bear money is coming into the market short at 91.50 in the 91.50 area, and that's preventing the longs to actually reaching the target. So in here we have a clear opportunity if price pierces the 90.87. If that happens, then this market will be on its move lower into the first target of this daily 50% short, and that first target, it's below previous lows, November lows here in 2017, and lines up with the previous lows at 86.16 here. Okay, and this is the kind of move we could get in this market. Okay, so on the daily time frame, the failure level, it's very clear. 90.84 price pierces that level. We are off for a short here in this market for a move initially into 88.83 and with a target 86.16. Australian dollar, Canadian dollar. This market also has been moving laterally. Lots of this market, have been are in lateral moves here. Now this market here has a level which is the 95.61. It is be respected, not respected, and then after that has been respected all the times. And this market could be moving lower to retest that level again. We also have the 50% short setup visible on the weekly here, which is actually pushing this price lower. And with a weakness of the Australian dollar, this is this continuation here, it's very possible. On the smaller time frame here, on the 4-hour time frame, we have highs to lows here that has traded on Friday here in 98.45, and this is pushing price lower. 97.46 is the target. Euro Canadian dollar has resumed it's apparently it's move higher here. It's not yet defined. Now when we look at the larger time frame here, we had a very technical market, very technical market. We traded this 50% here into first and second target. The aggressive measure move here, or extension, has failed, and once that's failed, this market has traded back down into the next measure move, which found also participation 50%, at least temporarily here. Okay, now this is a big range, so this 50% might not hold going forward, especially if we see the euro moving lower, and therefore we will be using this extension short that has been in play now 3 weeks as our guide. And this extension is still in a way in play, meaning that it could be traded here and as target, first target 147.12, second target 143.70. So if you have to buy euro and you want to go to Europe and buy euro, it could be worth waiting here. I'll need to buy euros before the end of July, as I'm gonna go spend some time in Italy in August. So I'm gonna wait for that, as I do not own euro at the moment. So but trading wise, the setup is there. 53.71 could actually push this price lower here. When we look at the daily time frame, we always have to look at the longs, and the longs found participation recently at the 51.39. So if this market continues lower, we will need to make sure that we don't get another bounce here, because this market has still participation long, at least on the daily. So it has weekly participation short, daily participation long, second test of dangerous tests. If this market comes and pierces, well, we are off the the race here, because at that point I do not anticipate 49.70 holding again, and we could just slide lower. So still time, still good to take a position short for this market, but keep in mind that 150, 140 is going to be a test whether this market is going to continue lower or not. We're seeing similar patterns in all the markets here. This market has also traded to the basically the high of the range here, the partial range at least. And not only this has traded in the past, in 2015, also the 50% short. So this market has tried to continue higher into the level, but it has apparently failed here. There was this extension that brought price into the first target, and the next extension failed. So that's exactly the same configuration that we see on the euro dollar here, and this is not that has not been working, and it's not working for the euro Australian dollar as well. So we could see this market moving lower due to this extension here, which was in play last week, and it's in play at the open today. So keep that in mind. Okay, so the 56.18, it's a level of resistance here. It has traded last Friday, last week, and as you can see, last week after trading we had that sell-off, also obviously due to the strength in the dollar index. Euro New Zealand dollar, all this market seems to show the same pattern here. They are all seem about to reverse here, and if this market does it, then the 160.13 is going to be the first level we have to look at. Remember, there'll be Draghi speaking at the beginning of the week, so be careful on the euro. We could see volatility on the euro, so it's very important that you keep that in mind. But from a technical point of view, this market has moved lower, still in this range here, and an extension short has traded here in the market. So if this extension short holds this week, if we see volatility and price gets back to the 168.30 level, then and that holds, then that could be the continuation short into the 50%, and that level would have first target at 164.90 here, and second target 163.25. right? Next is the pound versus Canadian dollar. Pound versus Canadian dollar has traded a 50% short here back in March from the highs that we see here on the weekly. These are the highs in 2015, and recently that has been, and then we saw the long also trading here from lows to highs, the 71.36. So currently this market seems to be moving between these two levels, 171.36 and 183.58. okay, however, this market here could also follow suit with what it's happening with pound, and therefore there could be an extension short here that could be could trade this week, unless this market is using a lower anchor. But for now I'll use the 167. If the market gets to 167, that's a level that we have to watch. As you can see here, the market is has continued higher in the last few weeks, including last week, and it has traded 50% here, 50% longs, and we're going to use this to keep a track on what's going on in this market and the sequence of measured move on the daily time frame, because that helps us navigate what's going on. So as you can see, we are seeing profit taking it right at that first target. Now there are two possibilities for this market. Either he comes and continues higher and trades into the second target, and that would line up with the extension short that we saw before. You can also use a daily extension short here to model behavior here, and as we can see, that second target will line up with that level. If this market comes back though this week, he might trade next traditional measured move here. So these are the two levels to watch. There's a short in the 76.70 area, and there is a long around those 174.30 area here, and that's what we have to look for a potential continuation higher, right? Pound versus Australian dollar, similar situation here. This market is trying, like all the pairs that trading against the pound here, is trying to survive this wedge here. There was a big move lower, there's a wedge. We also identify a 50% short on the weekly time frame that has traded when the the short in the euro dollar has traded here. So this market, again, there are two possibilities here. Either the extension short is already in play, and we're going to use a higher level here, is already in play, and could start pushing this price lower starting from this week, or the 181.52 is going to be retested, but medium long term seems to me that the fate of this market, once this flag here is pierced on the downside, of course we want to try to enter before that happens. That'll be too late, right? So the two levels to consider here are 178.22 and 181.52 are the two levels to consider. Pound versus New Zealand dollar, similar situation here, and on the weekly time frame we had a recent reaction to a level here, and that level is always an extension because of the way this market moved. That's what has traded and held price so far. The market was not able to print higher highs here, which is concerning, and it's now kind of putting a wedge to retest the 187.17. Okay, that's what we are seeing here. When we look at the daily time frame, this market is moving higher, but could be a move higher to retest or test an extension shorts that didn't come into play yet. That's the 192.13, which could be the end of this temporary move higher, because there's nothing else that is actually pushing this price higher on the daily time frame. Okay, could make a case of this extension here. This extension has failed before, and with the strength in the New Zealand dollar, with the weakness in New Zealand dollar, although this market could indeed move higher here, but this configuration here seems very, very weak. The market was not capable of moving higher, therefore it's possible that it's going to retest at 187.17 level, which means that any setup shorts should be taken as an opportunity to bring price lower. $1 Japanese yen, it's a market that has traded longs and shorts here. It is a market that has a lot of support for shorts because the high to low here has traded twice back in 2017 and at the beginning of 2018 here, and has pushed price lower into what? Into the previous 50% that never encountered, that never was strong enough to push price into the first target. Okay, so the shorts here seems to be in control. On the weekly there was a bounce dirty from this area, from the 81.82, but after that bounce the shorts showed control again, and might be pushing again this price lower into the 81.82, 81.80, 81.90 level here, and possibly even below. Okay, so the shorts are in control, and when we look at the daily time frame here, we had a 50% from the previous weekly short here, which has not held initially, but after that, as you can see here, but after that, so it pierced, the market also pierced the longs here, as you can see. So lateral move below a short, below a short level, but then in the next test there, the short held and the long have not held. So clearly there is a bearish bias in this market. We'll see whether this market is going to bounce off the 53.54 or continue lower. The larger time frame has target well below at 78 level, and the inner measure move 85.06 as first target in the 82.09 area, and extension second target is at the 80.48. Okay, so that's what we're seeing here in this market, which could continue lower. Euro, Japanese yen, it's a similar situation here. There is this large 50% short visible on the weekly and monthly from the highs in 2008 to lows in 2012. It was not respected in 2014 and 15, and then eventually he started respecting this level in 2017 and 18 here. This level so far has been respected twice. And as you can see, the last test is pushing this price lower. Now, this market has not been as technical as other markets. We had this initial move that pierced, the extension failed, which gave confirmation on this 50% short, and temporarily it has been holding this odd anchor here. The problem is that the problem of this anchor here is that the full sequence has failed. Okay, so the market at this point should at least come to test the 50%, which has not done yet. Okay, and we will see what happens there. So this market could continue lower here into 123.52 and potentially even lower, because there is a setup short on the larger time frame, which has the potential of bringing price much lower here, in fact below the lows of 2012. Okay, the next market is the pound versus Japanese yen. This market has actually a similar situation here. The weekly was not strong, the move higher was not strong enough to go and trade the 50%, so this market has been trading an extension short instead, and we can use this level as well. That's one level that we can use. We can also use other extensions here from the daily, but the point, that's not important, because the setup, it's the target of this setup is very it's well away. What is important is that there is a setup short here, which has the potential of pushing this price lower and that's what we're seeing here. When we look at the daily time frame here, we can also see the setup that is currently responsible for this continuation lower. It does not come from the highs, but it comes from the lower highs here, which have traded before. If for some reason they're still holding, they were retested twice. So even if you identify that after the fact, there will still be the possibility for a trade here. And this market is actually now moving lower, as the potential to test at 145.65 and potentially even lower. Okay, the daily setup is there, short, below 145.07. The first target at 141. It's actually confirmed. Doesn't mean that the market is going to get there. It means that the target is confirmed, which means that smart money and algorithms are going to do whatever they can to try to bring that price there. But obviously, you know, anything can happen in the market. Okay. Eugene dollar Swiss franc also has been moving laterally for many years here, many months and years. And as we can see here, we have some sort of range here, and the bottom of the range has been tested a number of times recently, and after that the market started showing weakness here, and it was never capable of moving higher in the last 2 years. In the last year here, above and into the upper range. And recently, this last week and the week before, we saw the 50% short being respected here, and that's from the previous swing high to low. Okay, and this has been respected on Friday as well, and it has targets at the bottom of the range here. So that's something that could continue lower here. On the 4-hour time frame, we also see a supporting 4-hour signal. Highs to lows has traded on Friday here, and is pushing this price lower. The first target is going to be 069 here. That helps price into that larger target. Australian dollar Swiss franc, we have also a lateral move here with a market that seems a bit tired here. When we trace from highs to lows, we see this 50% has been holding price since back at the beginning of 2017 here, and recently the high we saw at the beginning of 2017 to lows has also traded, which means that we have 50% within a 50%, and that has been holding price in the last few weeks here. And we started seeing that participation and a possibility for continuation lower here. We need to see the opposing measure move as traded here. It's been retested at this point, 74.12, so be careful for any bounces here. But if this continues lower, 73.71, then this weekly setup here it's on, and the 71.11 could actually trade. Okay, but here we could get a bounce. This is second test. Second tests are dangerous tests, so be aware of that. Canadian dollar Swiss franc has traded again the short here. They traded back in 2015 and again 2017 and beginning of 2018. It has been retested at the beginning of May here, and it has pushed price lower into the 75.44. Okay, so this is the 50% from lows to highs. I do not anticipate this holding, because this is a range, and also there's a larger time frame that is pushing price lower. If we get a bounce, it could be an opportunity for That could be an opportunity for a sell in this market. So the current sequence of measured move in this market can be identified clearly here, and that is our guide to what to anticipate next. So you can see here the 77.12 is trying to push this price into that first target, but there is that 50% that I mentioned that might not hold temporarily. Here is holding, but I anticipate that breaking, and therefore there could be an opportunity here for the first target and even the second target of these measured move here to trade. And this could actually help price into those lows of the range here that we see on the daily. Australian dollar, New Zealand dollar, we have a similar situation here. We remember that this market went to trade to previous highs, broke the sequence of measured moves that we had here, lows to highs into the first target. The next measured move failed, and that started the move lower in this market. And the move lower has been reasonably technical. We had highs to lows that has traded, bringing price into the first and second target. The next measured move has failed, which brought us back to the larger time frame where the 50% short has traded from highs to lows, and that has the potential to keep pushing this price lower into the first target 103 and previous bottom of the range here, right? So this is what we are seeing here, and any bounces in this market could be an opportunity for an extension short, a continuation lower. So any bounces are a positive development in this market because could give an opportunity for a continuation lower. And the first one level you can watch is the 107.98, 108. Euro Swiss franc. This market here has went to basically trade where we were saying it would, basically closing the gap here from the Franco-Geddon that we saw at the beginning of 2015 there, and after these 2 weeks, 3 weeks of move, the market came back last week, traded the extension short for a potential continuation lower here. Okay, so that's what we could be seeing here. So the 116.18, it's a level to watch if retested and defended by shorts, by bears. This could be the continuation lower here. This level is already traded though, so the market could just continue lower here, so mind that as well. Pound versus the Swiss franc here, we saw this market also trading an extension, a traditional measured move short here on a very large time frame. That's where the participation came from. Participation came from those levels in all the market trading against the dollar, and big move lower. We're seeing a wedge here since a few weeks. Once that move it's gone, it's done, we could see a continuation lower here, and this could come from either the 133.28 level, or it has already traded from the lower level here, or is about to trade. So these are the two levels to watch, the 132.84 and the 133.30 levels. These are the levels we want to watch for a continuation lower in this market. New Zealand dollar, Japanese yen. This is also trading lower here. We saw this market putting the 50% here under pressure a number of times, and 2 weeks ago, 3 weeks ago, that level has pierced on the downside. Okay, very important development it means that now this short here it's on, and as you can see this short has targets well below 63.27. Okay, huge move here possible in this market. Of course this is going to take weeks and months to develop, but the potential is there because the bulls are not participating, have not participated, they're not interested in holding this price. So in here the anchor being used by smart money, let's see if this is the one they're using. This is not the one they're using, and therefore we're going to use an extension short here, and that's the level that's going to drive us going forward. That gives us the first and second level of target, and of course this market needs to move below 75.83 before it can move lower, but the bulls are nowhere in this market, they're gone. Okay, so this market could actually offer clear opportunity for a continuation lower. Australian dollar, Japanese yen, it's is also challenging the 50% long that we see here after trading the 50% short back in 2017 and the beginning of 2018. So the beginning of 2018 has been a pivotal time here in which many markets have retested the important 50% level, and after that many markets have put on an extension short that is now pushing this prices lower. So the next that we have to anticipate in this market is a retest of 81.31, and if the lows here are pierced on the downside, this market is also in a big trouble because it could actually move much lower here into that first target at 64.88. So this is it for this week. Thanks for watching. Again, I want to remind you to check out the Modern Market Trading Mastermind on Facebook, and you can go to fibstocketrading.com/welcome/page testimonials, and also look at the testimonials of my students, and these are real results from many students I had in the years. And if you are interested in learning the Hipstalker methods or the dump money methods, let me know, and I'll be able to help you. Bye bye now.